What's up YouTube, it's your boy MX Style. This is how it's going down, and in this episode I'll be giving you a brief trading tutorial. So it's not going to be super in-depth, but it will give you enough knowledge that you need to be confident to make trades. If you are a beginner, I don't advise you to use a lot of leverage, especially as you probably don't understand the ins and outs of the markets. So if you are a beginner, I suggest maybe following signals, because essentially, like, you probably don't understand the in and outs of the markets, as I've said. So just to give you guys a quick briefing of what's going on with Ethereum. I have mentioned Ethereum quite a lot. Ethereum and Bitcoin are in a similar position. So essentially they are both in an ascending triangle, and that has a 70% likelihood of breaking out to the upside, with the price targets, in my opinion, being roughly around the $588 mark, but my target would be slightly below that. So essentially, depending on your risk tolerance, you could enter fairly soon, or you could wait for a confirmation of the breakout. And you're probably asking, how do I know when the confirmation of the breakout is? So you can see here that we had a large inflow of volume here. So there was low volume, and then the volume increased. So what we'd be looking for, as the volume has been decreasing now, we'd be looking for a large influx of volume confirming that the breakout is real. If there wasn't a large influx of volume, then most likely the price would pop up and then it would go back down, and then you'd have to wait for the breakout at another time. But if you'd entered a long position, then you could get wrecked, especially if you didn't have a stop loss. So I'm trying to stop you guys making the mistakes that I made. So essentially, there's two different things you could do. You could sort of wait now, or wait till the price retraces a bit, if it does retrace, or you could wait for the confirmation of the breakout, where this mark here, the $400 mark, has been broken, and even maybe the $415, $420 mark has been surpassed, and then potentially, sorry about that, you could potentially enter a long position and then ride the wave until the next target. Or potentially, if you're that risk adverse, you could just hold on to your long position throughout the bull market, and that would exponentially grow your Ethereum by untold levels. But that depends on the amount of leverage that you use. As a beginner though, I don't recommend you use a lot of leverage. What you do need to bear in mind is that the market isn't going anywhere. You do have basically 2 years to learn this stuff, and there's no rush. Don't get wrecked. You don't want to go to Wreck City. It's not a nice place, trust me, it's not a nice place. And yeah, what you also need to remember is that with the losses that you encounter, they will be multiplied, because essentially with the bull market, the price will increase. So if you lose £5 a day, that could be worth £100 in a couple months or a couple years, whatever. So do bear that in mind. That's why you don't want to overtrade. You only want to trade on certain occasions. And essentially that's that. So we're going to go into Bybit now, and I'm going to show you guys just a couple basic things. So before we do that, actually, the reason this is the price target is because, or the reason the price target is around $580 is because of the Fibonacci retracement. So I've done a Fibonacci retracement basically from the all-time high of Ethereum, and I've made a video about this yesterday. But essentially, each and every mark of the Fibonacci retracement is either a line of support or resistance, and this is quite a well-respected model. And you can see here how respected it is just throughout the different price fluctuations and different amounts of price action. So we can see this has been previously support / resistance. Each and every line basically has been support / resistance. So essentially, once we do have our breakout from this current level of resistance, this would be our next level or next target, which could take us a couple of days. It could, well, yeah, it most likely would take a couple of days to reach that target. It wouldn't just be overnight. So essentially, what you guys want to know is how to trade. So just to keep it super simple, different types of trading. So you can trade on the 1 hour. You could trade on the minute, by the minute, by the 5 minute, by 15 minutes, by half an hour. You could trade hourly, you could trade, 6 hourly, 12 hourly, weekly, monthly. Essentially, if you're day trading, you'd be working within the hourly time frame to all the way down to the minute time frame. If you're going to be swing trading, that is, you open a position, one day, you come back to it, a couple of days later, or even like a week later, then you'd want to be looking at the daily or the weekly chart. So that way you don't have to look at the chart each and every day. So as I've been saying, Ethereum and Bitcoin, they're in an ascending triangle at the moment, and the breakout, in my personal opinion, is imminent. We're just waiting for that amount of volume. So essentially, there's two different types of orders. And as a beginner, I keep on saying as a beginner, just heed my advice, because I've made so many mistakes you don't want to know. I've lost so much money, but that's besides the point. As a beginner, if you are going to trade with leverage, I recommend using anywhere from 1x to 3x, 5x at a push, just at a push. And then as you get more confident, then you can increase the amount of leverage. The reason I say this is because the more leverage you use, the less margin for error there is. So for example, if I entered a 50x leverage trade on Ethereum USD, then let me just show you, okay? The liquidation price right here is $385. And the current trading price right now for Ethereum is $389. So one swing in the wrong direction, you're wrecked. Like, your whole position is gone. Having said that, when you do enter a position, number one, make sure that you're not using your whole portfolio. Use a percentage of your portfolio. Depending on your risk tolerance, it could be 10%, a quarter, not more than half of your portfolio, because it's very risky. And even when you do enter, or even when you do move your funds from wherever it's stored to a leverage exchange, you don't want to be using all of what you have to enter a position. So when I enter a position, I use a maximum of anything from 50 to 75%, depending on the leverage and the level of confidence I have, and when I've entered the move, for example. So when I'm gonna trade, don't copy me, but I generally use between 5 and maybe 10x leverage. And you can see here on the 5x leverage at 50%, look at the liquidation price now. Look how it's a bit lower than what it previously was, but it's still fairly quite high, it's around $329. So I don't personally think it would go down to this level, but anything's possible with this market. Anything's possible. You can see here, look, this wick here is already, a lot of people would have been liquidated in that wick if they didn't take the proper measures. So when you guys enter a trade, it's important to make sure you have stop losses and also take profits. So what do I mean by that? So let's say I'm a beginner, I'm going to use a 2x leverage trade. I'm going to enter a long and use 50% of my portfolio, which is half an ETH. Not my whole portfolio, but on my balance. So let's say, so you can see here, first of all, that the liquidation price is a lot lower because of the leverage. So as a beginner, that's what you want. You're still going to be having psychological battles with yourself, and the price going up and down and whatnot. So just be cautious. Don't close your position too early, because that's how you can lose money. But you'd want to enter a stop loss from anything from 5% to 10%. Personally, I would put the stop loss for this breakout at roughly the $360 mark, because this was the lowest wick that we had. And looking at the Fibonacci retracement as well, or just looking at the chart in general, if we can zoom in quickly, we can see here that this is where we had our support. So most likely, if we were to go down, it wouldn't surpass this $360 level. So just to let you guys know. And yeah, so you'd enter a long, and then you put a stop loss. You'd put the stop loss for, let's say, $360, which would maybe be around, I don't know, 9%, 15%. Okay, there you go. And then, like I said, our target is going to be roughly around the $580 mark. But if you don't want to stay in the trade and you want to take your profits immediately, then you'd want to lower your target to roughly, anything from 10% to $10-20 down lower from where the next Fibonacci level is. So that would be roughly around $571. So that would leave you with a price move. If you were to enter now, hypothetically, that would leave you with a price move of around 40%. So if you were to use 2x leverage, that's now doubled to, let's say, 100%. So you've potentially, hypothetically, a lot of adjectives, you've potentially doubled your money just from that trade. And you've done it safely because you haven't used all of your portfolio. You've used 50% and you've used a safe amount of leverage. So as you get more familiar and more comfortable with the market, you can potentially use more leverage. But you do need to bear in mind that as you use more leverage, the liquidation price gets closer to when you enter the trade, and therefore a lot more risky. So if you were to do 100x leverage trade, the time would have been, for example, here when it bottomed. The time would have been here when the market had bottomed out completely and it was trading for $89. And the gains that you would have made, boy, let me just fill your heads up with hopium, basically. Not hopium, but like just potential gains. So if you'd done 100x leverage, oh my god. So you'd make what, 34,000%. So that's 340x. That would be a 340x move from March 12th to where it is now. But not trying to say do that, just don't do that. Not even I use 100x leverage because only madmen do that shit. You don't want to use 100x. Like 10, 15%, 20% maximum, and that's only in a rare circumstance. Rare. So that's leverage for you. And obviously you want to have your take profits. So your take profits could be anywhere from 25%, 50%. It really just depends on what your target is. Like I said, depending on how you want to do this, if you want to really maximize your profits, then you could potentially just leave your position open for the whole of the bull run, which is something I'm considering doing because obviously we all have limited capital. I don't come from a silver spoon family, and honestly, this bull run I'm trying to make millions, so risks have to be taken. But yeah, that's basically that. And I'm not sure if I said there's two different types of orders. So there's a limit order where you can essentially set the price that you want to enter. So let's say you think the price of Ethereum is going to retrace to around the $365 mark before it breaks out. You could put here your order price. So you put $365, and then obviously you choose the amount, the quantity of your portfolio that you want to use, 75%, with the leverage, and then you can enter. And the same thing applies for shorting whichever stock or cryptocurrency that you're using. And I wouldn't worry about post only and reduce only, but you can see here a reduce only order will only reduce your position, not increase it. If this order would increase your position, it is amended down or cancelled such that it does not exist. And post only will not be executed immediately in the market as a taker. Using this type of order will ensure a maker fee reward. If the order will be executed immediately, the order will be automatically cancelled. So yeah, like I said, I wouldn't really worry about that stuff too much. The market activity is a good idea of like the trends of the market. If it's bottoming out before you think it's going to increase. So I'm personally going to enter a position fairly soonish, just because I'm fairly confident, and yeah, like this, that's that pretty much. Like I said, beginners don't use too much leverage, and if you guys are going to trade, then you might as well use my link in the description, my Bybit link, where you don't have to pay fees. You get a small pot or whatever, and you basically don't have to pay fees for like your first couple trades. I don't know exactly what the amount is, but we both benefit from it. So if you guys are gonna trade, then please use that because it helps us both out. So yeah, that's literally been the trading tutorial. Tried to keep it as simple as possible. I hope you guys understood. I hope it wasn't too complicated or anything. If you found that useful, make sure you hit the like button and you subscribe as well, and also share with a friend. Thanks guys, see you soon, bye.